In this video, I want to talk about book value, a common bear theme you'll see on Twitter, online, when bears talk about lemonade, is they talk about the book value. You know, it's the book value, bro. They bring it up with us. They say the book value's in decline. The book value is dropping. It keeps going down for lemonade. This means they're worthless. They're not amounting to anything. They're worth a fraction of what the share price is worth right now. Look at the book value, bro. And so I want to give you my take and a couple thoughts around the book value for lemonade. And nice little graph here, book value per share, shared by Austin. Shout out to him, Patreon supporter of the channel. Thanks, Austin. And shows that, book value per share for lemonade has been dropping. So first of all, what is book value? Ask Grok to explain it to us, especially for an insurance company. The book value is just your total assets minus your total liabilities. But one little nuance or wrinkle with an insurance company for your liabilities, you also have to include the reserves set aside to pay future claims. So whatever amount that Lemonade would assume would, out of the money they bring in or they have on hand, that this set aside money, we're going to be using this to pay claims. So it's some estimated amount in your liabilities side of the equation that's going to end up bringing you to your book value. So in short, for me, why is Lemonade's book value dropping? Why has it been falling? The main thing for me is they're spending a lot of money as a sort of still a startup company that's growing and pushing, aggressively growing into the marketplace. So you're spending all this money on growing the business right now, and it looks bad right now, but the customers that are coming in the door are going to bring value for you for many, many quarters to come. So you're spending right now, and it looks bad right now, but that value is going to be spread out, that what you're bringing in over many, many quarters into the future. It also happens in the same way with, say, something like tech development. For Lemonade, they're a more tech-centric insurance company, and so they're spending more money on tech, more money on their engineering department, and they think, hey, as we really scale into the operation, the money that we're spending now on engineering is going to make things more efficient. And again, that value is going to be seen over time in the coming quarters versus what we're spending on that right now. So it's a matter of your spending right now in this snapshot in time versus the value you're getting from those investments later on. And I had this idea with book value. I tweeted this out, this back in November. I said, for book value, if we included the net present lifetime value of customers on it, I think it would tell a pretty interesting story. And so I did the math on that, and I'll show that to you now. Now, what do I mean by the lifetime value of customers? I've shown this in other videos, but lifetime value, I have it here on my model. By the way, if you want to join my Patreon, you get full access to my model and other exclusive content. But here on this tab here on my model, I have what I show as the equation for the lifetime value of a customer. And it's, if you don't understand the mathematics of this, it's just adding up the premium per customer for a customer times by how much gross profit they bring each quarter, times by, the annual dollar retention, or how much the ratio, the combination of how much customers in a pool of customers churn away, as well as how much those customers cross-sell. So that's your annual dollar retention. And then all of that factored in for some time value to discount the future cash flows back to today. So the further away it is, the more it's being discounted. And then what this equation does is adds up all those values. But you put in those values into this equation, you're going to get, you can see the equation here. I bring out a whole bunch of summation series here. And you get a lifetime value of a customer, in this case, of approximately $761. So then I've taken this idea here and found for each quarter the lifetime value of a customer. And then I've also found, which is in this line right here, and then I've also found the averaged, or the trailing 12-month average of that, because all the variables that you're sticking into here, premium per customer, gross loss ratio, annual dollar retention, these are going to vary quite a bit quarter to quarter. And really, the true lifetime value even of a customer cohort is going to vary, each quarter into the future. Each one of these sort of additions here, gross profits into the future, is going to vary some, but we can kind of take an average or an assumed average and get a pretty approximate lifetime value of what the customer would represent. So that's what I've done there, and then I've done a trailing 12 months, which makes it a bit more of an average. And you can see it's been growing here as the amount of products that are available to all the customers improves, as their loss ratios have come down. That has a significant impact on, even just a few years ago, we might have been at $153 per customer, and we were $290. Now we're more, in the $571 sort of approximate range. And then, if that brings us to this chart right here, where I show the book value per share multiplied by the LTV, your lifetime value trailing 12 months, times by the customer count. So this blue graph right here is what I showed you earlier, just showing the book value per share for Lemonade. As you can see, it's coming down, and it's actually the amount that is stepping down has decreased in Q4 at least, but the pink bars here is showing what I'm talking about, what I was talking about in this tweet. This is showing the lifetime value on a 12-month basis of every customer multiplied by the customer count. And as you can see, as your value per customer rises, and then your number of customers continues to rise, this is sort of sprung off the page, and I can expect it will continue to climb, as your customer count climbs, and as the variables that go into your lifetime value sort of equation become even stronger. Maybe your starting premium per customer is stronger. Maybe your loss ratio over a 12-month span can continue to trend down. So, and then we'll keep rising upwards based on the amount of customers you have. Because the whole point of this tweet and the whole point of what I'm showing here in the pink is you sort of picture at any given moment, if you have so many customers, like whatever it is, 2.4 million customers. Let's flip back to my model here. If you have this line right here, your LTV on a trailing 12-month basis times by the customer count. If you have, which is $571 per customer multiplied by 2.4 million customers, that gets you about 1.4 billion dollars. That essentially that's trying to say is all those customers that are now part of Lemonade are worth all their future gross profits that they're going to bring in are worth something right now, worth something today. So if we could quantify that and say, hey, that's worth something to the book of business, then that changes how you think about the book value of the company, because then it's showing sort of a present value of what all these investments you're making into this growth, into the customers. It shows some kind of present value of what that's worth. So you can see that's really the pink bars, are aggressively shooting up. The book value has been slowly declining. And then go one step further. If you add these two metrics together, then that gets you, your book value plus your lifetime value times customer count. Then you can see we were pretty level, and then around Q3 of 2023, it started to climb, and we've been climbing from Q4. We were at 1850. This is per share. 1850, and now we're all the way up to 2761. So this is great news. Like, if you're thinking about what the present value is, the book value of Lemonade, but you also call it kind of an adjusted book value where you add in what the customers potentially are worth, their present value of all the customers, well, the book value is steadily increasing, and this sort of adjusted book value, and I expect this to continue increasing. Again, the only reason you see the actual book value decreasing is because they're spending so much money on growth and they're investing for the future, and this, I hope, illustrates that investment in the future is going to bring in more and more customers that bring in more more value and cash flows and gross profits into the future that's only going to stack up on top of each other, and we're going to get that hockey stick effect for Lemonade. So thank you so much for watching. Remember, it's in the bag.